What's good, you guys? Welcome back to another Because of Sales podcast. This week, we've got a local Austin homie, Ward Mahoney. During this interview, we are going to dive into everything real estate when it comes to the real estate businesses Ward is running, how they're running them, what he's done in the past, what's working for them right now. So they run an online coaching consulting business to help people break into this and scale their real estate portfolios. He's also scaling out a brokerage right here local in Austin, and he has a handful of properties himself that have allowed him to do cool stuff like this and build businesses and take bets. Towards the end of this video, we do get into how, investing in real estate can be helpful for you as a salesperson to build wealth, potentially offset taxes, and a lot of things that I think are going to be cool for you as someone who sells something, whether you're a rep or business owner, to just learn about or be reminded of. Before we get into this episode, you guys, please go down to the first link in the description. Get on our free newsletter. We are a newsletter first company, always have been, always will be. It's free. You can unsubscribe at any time. But if you want the high points of these podcast episodes, in addition to recent events, news, memes, tips, tricks, AI stuff, and you just want a pulse on the state of selling regardless of the industry, get on our free newsletter. Now, without further ado, into the pod with Ward. All right, you guys, welcome back to another episode of the Because of Sales podcast. We've got another ATX local here in this one, Ward Mahoney. Thank you for coming on, Ward.
Dude, thank you for having me, man. Stoked to be here.
So if you guys are not familiar with Ward to this point, he does a few different things, and we've connected a little bit more recently, so this should be a good one. But Ward's heavily in the real estate niche, does a little bit of the online stuff, does a little bit of the actual real estate stuff. And so we're going to dive into that for sure. But Ward, for those of you that are just discovering you on this podcast today, can you give them the elevator pitch on what you're up to right now?
Absolutely, man. So what I'm doing right now, really quick, just 10-second version. I'm 28 years old. First thing that I did, got out of college, actually went into tech, computer science major, so very systems-oriented thinker. Immediately got into real estate investing, right? So I went out and bought 4 or 5 properties within the first 2 years of me getting out, saw the power of leverage. And then from there, I just started creating a bunch of relationships within the real estate space. And fast forward to today, really, I've kind of ended up starting a coaching business with a partner of mine who's actually one of my first real estate mentors, as well as starting a few different other real estate lead gen companies and really running, their marketing and scaling them out. So today, primarily, I'm an investor. I'm a realtor. I do that a little bit here on the side. We just opened a new brokerage, so staying busy. And then, of course, running the coaching business.
I guess a good starting point would be, why real estate? Why'd you go down that rabbit hole?
Yeah, dude, it was funny, to keep the story short, I remember it was really about the idea of passive income. That was like the initial thing that really kind of got my wheels turning. The fact that I could go and, buy an asset, obviously have, my rental cash flow exceed my expenses, my mortgage payment, management, etc., and then pay me $1,000 to $2,000 a month, whatever that may be, captivated me, right? And then obviously you learn about all the other benefits, appreciation, etc. I was like, that is where I'm starting. And if I can get a good base of say $5,000 to $7,000 a month within 2 to 3 years, leveraging my W-2 coming out of college, I'll be in a great spot to take a huge shot, a huge at bat a few years later.
You said you studied cyber in school or?
Computer science. Yeah. So I was a total nerd and a business minor. So my goal was to kind of bring the two together and then actually be able to understand digital marketing and the systems behind it so I would be able to scale some type of a business.
What led you to go all in with the real estate side of things? I don't think you still do the computer science stuff anymore, right?
Not at all. That was just more so like keeping my windows open because I didn't know what I wanted to do after college. But really, on the real estate side, the thing that pushed it for me was that concept of freedom. Knowing that I can go and buy 5 triplexes, each one can spit out $800 to $1,200 a month, and get one property management company, get a very, very, very small economies of scale if I'm in the same market, live off of that cash flow, get that extra appreciation. I can lever off of that and I can continue growing. And that really becomes my insurance plan. That gives me my time back and it gives me some opportunity as long as I can build equity to go out and take some really big swings.
You mentioned when we were talking the other day, I think you said you're from Boston, right? Or Northeast, somewhere up there?
Yeah, dude, from Boston, born and raised.
What was it that led you to Austin?
So it really was actually a partnership opportunity with a fellow by the name of Diego Corzo, top producing realtor here in Austin for many, many years, leads the top producing realtor team here as well, 17 agents. They're on track this year for doing about $250 million in volume, which is crazy because this is one of the worst real estate markets we've seen in forever. But what's funny is he was actually my first ever real estate investment coach. His story there was nothing short of incredible. He graduated college with nothing but a lot of debt, computer science major, major, got a job in tech, leveraged that to build up a portfolio, ended up getting across 66 units, 25, 30K a month in cash flow by 28, 29. From there, he started coaching. And that's when I was already 2 years in the high ticket space doing ads primarily. And that's where we really joined forces and we're like, let's build something here together.
I'm curious, this might be relevant to some of the listeners here, but you found a guy that had just done what you were trying to do. How did you find him? And then when you started working with him at first, was it through a mass market service that he was offering, or like, how did you get to learn from him so closely?
So the coaching community at that time was called Rat Race to FI. And it was led by two fellows, Diego and this other fellow by the name of Felipe Mejia. I heard him on the Bigger Pockets podcast with Brandon Turner. And I was like, something just clicked. And I was like, I'm going to shoot him a DM. Shot him a DM. I was a sophomore, junior in college at that time. And he was like, yeah, man, let's connect. Let's do it. So we ended up jumping on the phone. I was completely shocked. And then from there, he invited me. I was like, look, I'm a college student. I'm pretty broke. I can't afford to join, but what I'll do is, I'll build out your website. And that was actually the exact same thing he did to another coaching group. So he really respected that. He said, hell yes. And from there, I was in and I couldn't really afford much at that point. So I was literally like putting all the events and everything on a credit card. And then through that, I would just lead with value. And then that's where the partnership opportunity ended up lending itself a few years later.
Was it your idea partially to start this online real estate coaching program? Was it his idea and he's just like, hey, I need some help doing it? Or like, how did that come to fruition?
So the capacity that we had originally started working together was to actually grow the same group that we had. The same group that had joined pro bono. At that point, it was not high ticket. It was low ticket recurring. Interest rates were extremely low. So a lot of people were buying and there were no ads, nothing. There was probably, I want to say maybe 50 people, maybe 60 people. Engagement was super high. But in that, I ended up seeing a massive opportunity. There ended up being, partnership friction after about a year working on that project, not with myself, but his other co-founder. Because at that point, I was really just kind of working under them, helping them grow it. That's where some of that opportunity really came from.
Besides delivering services and outcomes, like personality wise, what do you think that he saw in you that made him kind of take the bet on extending you like a larger role or bigger piece of the pie?
Well, number one, like my track record. So we actually had worked on another business. So before we really went balls to the wall on that coaching company, we actually worked on another business together. It was a real estate lead gen business. And that's where I really got to take my ads ability because I was working at an SMMA agency under another mentor for about 2 years. And I was able to directly apply everything I had learned from that opportunity into this real estate lead gen business. Super simple. I would say this is my first funnel that I was really running that actually popped off. That business, Diego is a 25% partner of. Again, I was an employee off a rev share. So I still did well with it, but I didn't have equity in the business. And we ended up scaling that business from like 20K a month in new business all the way up to about 160. And we're getting like an 8 to 12 ROAS on month one. And then with the recurring offer. So we were just killing it. Built a sales team, scaled a sales team with one other fellow who was running that. We were really running it together. I was doing ads, he was doing sales. And we scaled up the sales team together to 8 people at one point. And we just kept seeing our ROAS stay consistent. So we just kept scaling our UGC, scaling our content, and scaling our spend.
I didn't realize you had done that. This was lead generation for like what kind of real estate?
So this actually serviced realtors and wholesalers and investors, helping them find off-market deals so they can go out and expand their real estate portfolio. And really what it is, it was cold calling, right? So it was essentially the product, the offer was $2,000 a month, $1,299 to $2,000 a month recurring with $1,000 sign up fee. And with that, you would get a full-time cold caller that would make 1,500 dials a day that was fully trained on your market in your buy box and would go out and just grow your business for you. And you, as the entrepreneur, investor, realtor, would just take the hottest leads that are pre-qualified through a quality manager. And then you would obviously follow up on those and profit once the deal's closed.
So you said from 20K a month to 160 pretty quick. Why did it end up phasing out like to end up where you're at now?
So that's what it was on the new business side, right? So when I say like 20K a month, like we were bringing in 20K in new monthly recurring subscriptions. That was before ads, actually. That was just pretty much going organic and partnering with different influencers and stuff. As soon as we brought ads into it, we scaled it like crazy. So we were, I would say within like 6 to 7 months, we were at that 20K mark MRR. I would even say less than that, probably 10 to 15K of new business, about 20K MRR with that business. And then within like 6 to 7 months, we were bringing in brand new, like 160 grand a month. That was monthly recurring revenue, month over month over month.
And so when you scale this up and it's like MRR is the most beautiful thing that everybody goes for, but like what ended up causing you to shift away?
So I'm just being fully transparent. So I am still involved with the company, right? So what I do is I run their ads. So I'm still, pretty involved. We have a team there. We built a team out. So it's definitely still something I'm still involved with. The partnership, the owners have changed a lot. So for example, Diego's out of that business, someone that I align myself myself pretty closely too. To answer your question, it was partnership misalignment.
It's part of the game,
100%, man.
That's even like from you toward Diego and vice versa, like probably a really great test of each other's, I don't know if loyalty is the right word, but like if you guys were both quote unquote like doing well with this business and you both kind of you still do some work for them, but like you're still working together after that, I think that shows something, right?
Yeah. And I would also say, because that was my first real big noticeable win. I mean, on the front end, right? Like we'd spend 10K in ads, we'd bring 100K in revenues. And then month 2 would hit and we'd get a 10X ROAS on month 1. Then month 2 would hit, we'd get another 10X ROAS on the same money spent. And the issue with that business was an LTV issue because people weren't retained. So the average LTV was about 3 months. If we were able to keep them for say 6 months, the profitability on that business would be just off the wall. But that was the primary challenge of that business. And it wasn't where I wanted to put my focus, was solving that problem, because obviously, my highest and best use case of my time, the highest leverage activities for me was just going all in on ads to create the opportunities for the sales team.
That's funny, man. We are both currently running communities of a sort, like a high ticket community. And then I had a sales agency that I was running. We basically did like done for you sales teams. You guys were doing cold calling. You're still running the community. You're a little bit more involved in that. It sounds like comparing the agency/service based model to more of like community, more like B2C, let's call it, even though you could argue, like, what are your favorite and least favorite things about each of those models?
So I'd say number one, like the agency side, the marketing's way easier. Reason being is because number one, your offering, it just converts cold traffic way quicker, right? It's literally like I can help you 3x your business by doing 1,500 outbounds a day. That's not a direct angle we took, but that will convert a cold audience. Someone immediately sees that value and you don't have to build up as much trust. That's number one. Number two is the MRR side of it. You can get a relatively high ticket thing. And if they have a win off of your services, because your systems on the back end are set up properly, you can get some massive margin there with the MRR, which is obviously the sweet spot. Number three kind of goes back to what I was saying with number one, but it just requires less trust. And really it's more result focused there. And you can show that more so through case studies. Someone has to trust you less because they're coming in at a smaller monthly mark. It was an easier sell. I'll say the con of that business model is the margin, because obviously you've got a lot more people, you've got a lot more fulfillment issues. It's a lot more of a supply side constraint business, and it's a lot easier on the demand side. The things that I like about the actual coaching and community side are, number one, it's high margin. As long as you get your solid ROAS down, you can crush it. But I noticed that the number one hardest thing within that business model is, without a shadow of a doubt, is building trust on the front end. And it's making sure that your top of funnel has a very good value proposition. 2, middle of funnel, you have a really good long form differentiator in some way. So people go to you instead of someone else in a super saturated market. That is, of course, results driven. And then number 3, bottom of the funnel, you need to make sure your closers are sharp. And if your closers aren't sharp, you got to be way more on top of them and way more scripted and just way more systematized on the sales process than you do on the agency side.
Yeah, anybody who's in the coaching community info space knows that like real estate is one of those where there's a good amount of competition, right? So just so we can give some context to the audience, what is y'all's zone of genius with your community? Like what exactly are you focusing on helping people do?
Really, like our unfair competitive advantage is twofold. Number one, our case studies are insane, and just full transparency, our case studies follow a lot of different strategies. So what we've really found that we're really good at, because we've been around for so long now, we've been around for like 6-7 years, is we've built the plug and play systems across multiple strategies with existing teams. So someone can come in, and as long as they have cash, we can pretty much help them find a pretty solid opportunity, or at least help them vet that opportunity really quickly. And again, they can come in, plug and play systems. Here's your deal analyzer, here's everything you need. And then here's your exact team. Here's your realtor, here's your property manager. And because again, we've been around so long, because our retention was so good with everyone and people were getting results, people were buying properties. And as they started to succeed, they'd reinvest back into the group. So then kind of phase 2 of the group was someone would go out, they'd find an amazing deal, probably using one of our cold callers from the other business because we vertically aligned them. They'd go out and they would, find an amazing property, say they'd make 300K equity because they walked in and they did a really good job in the negotiation process. They'd cash out refi, maybe sell the property. They'd take that 300, they'd start lending it from within the group. And it just happened naturally. It wasn't even part of the business model. Then we had another offering that continuously made us more and more different. And then people, as they grew, continuously got more and more cash flow, more equity. And it was really just growing itself at that point.
That's kind of what I'm trying to do right now with our community. It's obviously a smaller scale because it's not purchasing real estate, but creating that like fulfillment flywheel from the community. And we have it to an extent, but it's the ultimate challenge, but it pays off so many times over if you can establish it. How long have you guys been running the community?
So right now that community is called the FI Investors, stands for the Financially Independent Investors. So really that company is a continuous continuation of Rat Race to a Fi, the first one that I had joined. It's obviously like version 2.0, I would say. But if you were to add the both of them up, because it really was the same customer base that we have that loyalty with, at this point, 6, 7, 8 years. If we look just at Fi investors, it's been about 3 years.
Cool. I mean, that's a lot longer than most people, especially with all of them combined. So now that we kind of set the scene for people who are brand new to what it is that you guys do, you mentioned that it is difficult to shrink down the conversion window, if you will. Like they discover who you are, you're running ads or you're running content to get people to book calls, to inquire on your services. And I'm right there with you. It is a struggle, but what are some things, even if they're really small, that you've seen make incremental difference in doing that, in shortening the cycle, in getting them to commit sooner? And this could be, all the way up in marketing, this could be a sales thing, but for you guys, like what are some things that are just top of mind that have shown some success so far?
What I would say initially, the very first thing is just making sure, understanding the sales reps, the closers that I needed to actually close the deal. And it was a sweet spot between someone that knew the real estate lingo enough that could talk intelligently about the prospect's goals, but then also actually had the closing side down pat. And that was the number one highest leveraged thing that has made the biggest difference for us. I would say the second biggest thing for us is most definitely actually our setter. Our setter is extremely, extremely organized. He blows me away by the systems he has. His follow-ups are amazing. And really, it's just been absolutely huge just because our follow-up is so on point, right? Really no lead falls through the cracks. Someone stops responding to us, we're right back on. We're dropping value instead of just kind of like dropping a bunch of question marks. So we bring them back into the funnel. We drive them to a piece of long-form content or shoot them a call recording. From there, they directly book a call. And that helps a lot. I'd say the third one too is within our sales process. So I took about 300 calls, maybe 400 calls. I forget how many. I was closing at a really good clip. I was solo. I was doing anywhere between, when I was really crushing it, I was doing anywhere between I would probably say 45K in a great month in terms of cash collected. And then deal value, we were just me alone, doing 4 shows a day. I was able to close, about 62,000 deal value. I think was my best month ever. Me just ripping calls with my setter and just making it happen. And one of the things that I realized within that sales process, the thing that was absolutely huge was actually inviting the qualified prospects instead of going for a hard close, which I may have lost some money on, but instead of going for a super hard close on the colder audience, what I would do is I would try to stack as many calls as I could on Monday because our calls were Tuesday. And then I would try to get 10 to 12 people guess on those calls. And then what I would do is I would do follow-ups on, the following day at 7:30 a.m., 8 a.m., 8:30 a.m., 9 a.m., just all 10 of them. And I would just close at 50%, 60% on those follow-ups. And my follow-up show rate was stupidly high, obviously, because they just received more value from being on the call and could feel the community.
So you would invite them into a group call that was already happening in the community, you're saying, and then you would set the follow-up the next day?
Exactly. So my SOP, for example, literally how I would close on these calls when I was crushing it, I basically tell them, hey, I would love to actually personally invite you into, one of our calls. I think you would be a great fit. Confident we can help you. At the very least, this is what we're going over, and this is the value that you get from that. It's absolutely, I'm 100% in. I'd stop the pushy sell. My goal is just to get them to show up. And we start every call with wins. So then once they show up, we would just spend the first 15 minutes on wins. And because we have great fulfillment, we'd have people saying, I just bought my 6th burr since joining 6 months ago. I just raised 50K in capital for my next flip. I can't wait to go to this event. The last event was the best thing I've ever gone to. So a lot of our members were selling for us. And then before I left the call, after I had invited them, I would never let them leave the call until committing to a time the next morning. And I would make that contingent. So I'd say, hey man, I would love to have you as a guest. You're going to receive a lot of value. Here's what we're going over. Can't wait for you. Here's what you're going to learn. Are you around 7:30 a.m. tomorrow morning? No, I want to do Friday. No, man, if I'm going to have you on as a guest, it's really important that, you respect my time. Is that fair to you? Otherwise, it doesn't make sense having you on as a guest. And that's how I'd structure it.
Quick break here for the sponsor of this week's podcast edition, the Serial Sales Community. If you're not making the money that you want in sales, there's a chance you need more sales training. But if you feel like you've done all the sales training, you feel like you've put in the reps and you're still just not taking home what you want to see, it's probably because you're not in the right opportunity. Now, if you're at all interested in a new opportunity in the remote appointment setting or closing space, this is 1099 from home, inbound leads, location, schedule freedom, all of that kind of stuff. That's what our business, the Serial Sales Community, does. We take ex-corporate sales professionals from any industry, or honestly just everyday people, and help them break into this heavily commission-based industry so they can work from home, spend more time with the people they love, and potentially raise their earnings. We do have some sales training, but you can find sales training on YouTube. What we really focus on is getting people into the absolute best role that they can get into from the very beginning and helping them safely navigate this rather volatile industry. If you're looking for upside and to play offense, this could be a very considerable option for you. We posted 477 open 1099 remote inbound sales roles last month, and we're pacing about the same this month. So you don't need more sales training. You probably need a better vehicle. And if you're serious about that, we can help you. We can help you do it from home. So go down to the second link in the description of this podcast, check it out there, watch the video, book a call with the team. And if you mention because of sales, we'll give you 5% off any package you choose. Now back to the pod. When we spoke recently, you told me you were doing this 2-call follow-up, high show rate, high close rate, but I didn't know that's the process. And I know you run one of the coaching calls. Was this the call that you would host, or was this like with someone else in the program, or who was hosting?
Yeah, so it depends. So if they were like a little bit more newbie focused, what I would do is I'd invite them to my call, which was at 7 p.m. Central. If they were a little bit more sophisticated investor, what I would do is I would invite them to our lead call, our call with Diego. And the other thing too, like Diego's unfair competitive advantage is twofold. Number one, he does an incredible job of making everyone feel heard and feel valued in the call. He spends a lot of time on wins and he just fosters a great community. And then two is his story. His story relates with a lot of people, and that really is what top of funnel will bring people in. So they're genuinely super, super excited to actually come into that call, which helps with our show rate for the actual fulfillment call that we're inviting them to. And then of course the follow-up call and the close.
That's a unique perspective. I don't know if I've heard anyone else doing that. Like maybe inviting them into the community, but then like structuring that call super intentionally to where it serves the current clients, but then also is encouraging for the prospective clients to jump in with you guys. That's really cool, actually. You touched a little bit earlier on, I think you said the first thing that really has helped you guys out. I can't remember exactly how you had said it, but finding someone that knows enough about real estate and enough about closing to do the job well. For the sake of exercise on the podcast where salespeople and business owners are listening, you have two salespeople in front of you. One of them is like real estate savage. Maybe they're like not a typical salesperson, but they're super, super experienced. And then you have one person that is a salesperson through and through, but doesn't know anything about real estate. Which person are you picking?
Honestly, knowing what I know now and just looking at all the different reps that we've managed and brought through our offer, it's way easier to coach real estate, man. So much easier to speak. It's so much easier to coach real estate. And then also just to actually share, different success stories and wins that just go technical enough that it's easy to understand, but it makes a lot of sense to the prospect. What I've seen like crush it on our offer is anyone that's in like door-to-door sales that also like dabbled in wholesaling. One of our best closers was someone that did door-to-door sales for like 2 to 3 years. Absolute shark. Didn't really need to coach him that much on the sales side, but on the actual real estate side, he knew just enough to be dangerous. And instead of training him on the sales side every day, we just spent 30 days and I'd essentially give him real estate coaching. And that was the perfect like mix because he felt like he was getting a massive value from it. And obviously he was closing for us. So it was a really good partnership.
Yeah, I can attest to that as well. As far as like the industry knowledge, depending on the industry, is usually easier to teach. Do you think it's easier to teach someone real estate than sales? Because real estate, a lot of it comes down to like black and white numbers. Or, I mean, that's kind of what I do. I work with salespeople for a living, and you're right, it is one of the harder things to train people on because there's so much like unspoken, and you have to be super, super aware of you, not only yourself, but the other person and likely outcomes based on certain things that happen in the call. Is that a fair assumption that like real estate is easier because of the whole number side of things, or why would you pick that?
So one, it aligns with my background. So I'm more of like a real estate investor. First thing I did was like levered up and got into multi-millions of leveraged real estate within 2 years. So I had a lot of experience managing different strategies and, buying, acquiring, liquidating, refinancing, whatever. So that's kind of more so like what aligned with where I started. So it's a more complementary partnership from that stance. But also though, sales, because I've done both, turning, a really solid real estate investor into a closer takes way more time and costs the company way more money because sales reps, and then obviously Dylan, you know this, man, sales reps are the most expensive people to train and hire because you lose money on the deals they don't close and you lose money on the at-bats that you get them. So with that being said, I'd much rather have someone that can absolutely come in and like really hold themselves accountable and crush it on the sales side where I can add a lot more value to them and then coach them up on the real estate side. And not to mention something that we really pride ourselves on, almost every single person that has worked with us, that stayed with us more than 6 months, they've bought a property. So not only are we helping you make money, but I'll sit down with them and I'll tell you, hey man, what's your year goal? What's your 2-year goal? How is real estate a part of that? And let's help you. Let's treat you like a top student. Let's find the market. Let's give you the team. Let's give you access to the capital, and let's help you hit your goals. Let's get you to that cash flow number. Let's have you make a ton of money on the offer so you can reinvest that capital into the real estate itself.
If you do find that person who's like very experienced in real estate and they're just coming to close, it's like real estate's one of those things where you can do really well, you can make a lot of money. And then if you already have that, you're not as incentivized as the salesperson. But I could absolutely see the flip side of that being be a sales rep, start making good money, perhaps for the first time ever, and putting that into real estate and then doing that over and over. I mean, eventually you get to a point where you're like, maybe I don't need to be a sales rep. But in the short term, it's like, no, I want to keep doing this because like I'm seeing it turn into something bigger. I'd hope that if they're working with you guys, they're at least interested in doing that, you know?
Dylan, I love that point, dude. What I'll say to this is Diego and I, as business partners, as super close friends, what we focus on is, we have to be abundant. We absolutely need an abundance mentality. There are plenty of closers out there that can help us close the offer. And what I would almost rather see is if a closer comes in, closes at 30, 40, I don't care, 50%, they're making enough money to go out and buy a rental. One, that takes a while. It's super scary. So you actually need more hand-holding as you get into it. So that does help build the stickiness of the relationship. But on the back end of that, if we could actually help a closer scale out and then become a super active member in the community, we have a super sticky relationship with that person. It really comes down to our hiring funnels. And if I can't replace that person because of X, Y, or Z, the onus comes back on me because our systems aren't there on the front end.
I'm in a similar boat where it's like the best salespeople usually do become like bigger parts of the community. And then it's like a self-serving cycle, I guess, which is good. So, you guys sell community access. You have a reputation that shows you know what you're doing. And there's a lot of other people out there. They're in the real estate niche. Maybe it's similar, but they structure it different, or, everyone has their own backgrounds. But from the untrained eye, like if I'm just someone who's looking to get into real estate and I come across your ad and then I come across someone else's ad and then someone else's ad, I'm curious what you guys are doing to kind of stand out, specifically in the eyes of someone who like doesn't know better, because I know you said you have great case studies. I know you said, really good at community building, but from the outside looking in, that stuff can be hard to show because other people are also trying to show that. So like, what kind of strategies are you taking to like show that to people in a way that's better than what other people are doing, if that makes sense?
Yeah. So basically what we do there, a few different things. One of the things that we do primarily is one we've tested at this point, probably like 600-700 plus ads. So we've got a lot of data on what works, and we've really created hooks and angles around all our different case studies. And we've really nailed down, we've got like 4 winners. Each winner has brought in multiple hundreds of thousands. We're talking rows of like 10, 12, 13x. And as we got more data, we were really able to iterate on top of that and create more long form content that we'd actually send to them once we were setting. And the way that we were really able to differentiate was, one, identify those winners just by taking a large volume of sales calls, a lot of pre-qualified and unqualified calls in the beginning. But then 2, we really personalize our setting process. So when someone comes in, we are not just surface level. We're really trying to figure out their challenges, leading with value. And then as soon as we can see that, we've just provided a little bit of value, we try to provide a little bit more value, then we come in with our request and we book the call. And that's made a huge difference. Our ads, will share a lot of what the product offer is, but the actual ad itself is really just 1 to 2 sentences. It's a hook that shows just an amazing case study that can't be ignored. It piques their interest. They come into the DMs. We add value first, which is that differentiator. That's how we get them on the call. It's also why our show rates are so high.
Okay, couple questions. Your top 4 performing ads, a lot of those, or I don't know if they're all like in that hook case study format?
Not all of them. I would say 3 of the 4 are. And then one of the other ones is an image ad that really talks about the offer that works really well for a warmer audience. So for example, like that 4th winner, that really cleans up on anyone that's middle of the funnel to bottom of the funnel and will bring people back in. And the other 3 are really top of funnel. And that's where we get a majority of our one call closes from.
Let's talk about that image ad, because I love the idea of image ads because they're so easy to make and you can test so many variations. You just spark something into my mind that I now want to go and try in my own business. But you're running image ad it's a DM, right? And then your setter chats with them. Do they do any phone stuff or all DMs?
Dude, all DMs. It's funny. So we've had all our closers triage before. We've actually noticed that we have a lower close ratio on that. So what we do is we essentially triage and confirm and reconfirm through our setter. And we found that keeps a way higher show ratio for us.
I need to go make a image ad, plain text. Here's our offer. I got to try that. Where'd you find your setter though? You speak about them like they're the best setter ever. Not saying they're not, but like, where did you find this kind of person?
So it's actually a company called Virtual Latinos. I know it sounds absolutely crazy. I don't like the name of the company, but they provided really good talent. Diego's from Peru. He's an immigrant from Peru. He came to the States at 9 years old, right? So obviously his primary language is Spanish. With that being said, his brand attracts a lot of Spanish speaking, investors. So we were looking for community managers. We were growing when I was just doing everything, and we were probably at like the 20K a month mark. And what we were hiring for was a community manager. So we ended up going through Virtual Latinos, and we were going to have them do onboarding calls and really just making really just a customer success coach. And what we had learned was, as we started talking and as I was scaling the business, the number one bottleneck was setting, because I was just trying to optimize my calendar for calls, trying to prove out the offer. And I remember he told me, because we weren't even going to hire him for setting. It was all for community manager stuff, fluent in Spanish. And I remember talking to him. He's like, well, actually, I was a setter at my last company for like 3 years. I'm like, you never told me that in the interview? Like, that's crazy. Like, tell me what you did. And he just ended up scaling 2 different offers. I was like, well, tell me about your systems. And I realized he and I had like the exact same systems brain, but also understood some of the fundamentals of building trust. Plus he spoke Spanish. And I was like, you are going to do onboarding calls and setting. And then we started making the most money we have.
How long has he been with y'all?
18 months now.
Yeah, that's one of those positions, man, where the closer you are to the sales function, you realize just how important they are, like how much of a difference they make. But if you're removed from it, like if you're a business owner who has never touched that part of the business, it's really easy for you to just think, oh yeah, it's just an appointment setter. We can find another one if they leave. But dude, like having an appointment setter that sticks around for more than a year, 2 years, 3 years, like they're one of the most valuable teammates, because they get to know the offer so much better in the way that you're serving the clients and the case studies and everything. Like it's so hard to train on that,
So difficult. And the other thing with him too, that we treat him like family. So like all of our events, we fly him out. He's from Guatemala. He's like slept on my sofa. He slept in my guest bedroom. He's met all of our members in person. We spare absolutely no expense when he's coming out, and we show that we absolutely love him. We pay him on time. We pay him a good commission, so we incentivize him correctly. The other thing too is he wants to be an investor. So he's actually purchased 3 rental properties in Guatemala since working with us. He had a baby within the first 6 months of working for us. So the baby's like 8 or 9 months old. And between the real estate, he's a hustler, he's a grinder, he's systems oriented. He's super motivated because he's building for his family.
Is he a younger guy or?
He's either 32 or 33. Shout out Victor, bro. We love you, man.
Hopefully he hears this.
Yeah, I'll send it to him.
Let's see. I guess you're still involved in lead generation a little bit. You're still involved like working with people to help them do this. And then you're running the other side of this, which is brokerage and building the real estate businesses. There's a lot of directions we could take this in. You're pretty involved with, you said, the recruiting of like trying to grow the brokerage, right?
Yeah, it's another whole project that we have. What's cool is that's very vertically integrated into our existing systems and other businesses. So as an example, so last year, probably about 6 months ago, we really believe, once in a lifetime opportunity to be a anchor partner. I'm one of the founding members of the Texas branch of this new brokerage called Realty of America. Sign up behind us, ROA, ROA. And Diego's background, he did 2 things really well. He built the Nino team here in Austin, Texas. He's mentored agents going from no sales experience, no realtor experience, doing, 500,000 GCI. If anyone's not in the realtor world, that means gross commission income. That's your take home as a realtor. And like I said, today it's one of the worst markets, especially in Austin. And he's got a team of 18 agents that are going to sell 250 million in volume, which is just unheard of. And so once this brokerage opportunity really came about, it was an absolute no-brainer. The way it's structured, if you're curious, is it's a downline structure. So essentially, if you recruit someone on your first line, you make 3,500 as they cap. So as they sell 3 million in volume, if they recruit someone else, you make 2,100. If that second line person recruits someone else, you'll make 1,400, so on and so forth, all the way down. It's structured like an MLM, but it is not an MLM because you can actually make a lot of money by providing the right resources to help them scale their realtor business. And what's really cool, like where this made a lot of sense for us is, we've got 150, 200 students in FI investors. A lot of those are already realtors. We have a ton of trust with them that we can really just, plug and play them within the brokerage. And of course, our investors are looking for deals. And if we build a community of realtors, they're able to do so. The last thing I'll say that too, that's really our unfair competitive advantage in the brokerage world is combining the systems on the coaching side. So for example, on FI investors, we do quarterly events. We do about investing, tax strategies, a realtor, et cetera. It was always a fundamental piece for us. But we also have structured calls, onboarding systems and automations. We literally just ripped off R&D. We just duplicated that over to this new community essentially. And we just brought a ton of realtors in, and we would treat those realtors essentially as like closers to go out and recruit for us. And then we'd bring them through the same training processes and provide the same calls and fulfillment process that we would on Fi. So it was just an immediate duplication, and it made so much sense. So we're like, let's scale the hell out of this thing. And it's been amazing.
Yeah, the vertical integration of all that is like pretty thoughtful if this has happened. Like, how many of these people kind of meet you guys through the community, go on to use the dialing, then become part of the brokerage? Like, is that a common path that they go through, like everything, or not so common?
So it's happened a few times. Just being totally honest, like the real synergies that I see is not, and that's actually a piece that we're looking at, right? But the real synergies that I've seen are the angle of helping realtors buy their first rental property so they can build wealth and start seeing an exit to production, and then also playing the tax strategy game as a realtor. If you're a realtor, you're labeled by the IRS as a real estate professional. If you're a full-time realtor, you have to be full-time. I can dive into that if you want me to, but it's probably not applicable to the audience. But you can save massive, massive money by playing the tax game and buying real estate as a real estate professional. That was one of our selling points for FI. And now it's cool as we can recruit someone and say, hey, we're going to help you grow your business. And now let's bring you over to FI. Just bring them on a call, show them how to actually do that. They'll sign up for FI almost immediately because we'll help them save astronomical amounts of money on taxes and help them get a rental and start building wealth to get out of production. If we have a realtor that comes in on the FI side, they want to get into realtoring, or sorry, they're already realtoring, but they want to scale their realtoring business. Every realtor knows 80% of the business, I'd say 90% of the business is all lead gen. That's the only thing we really focus on ROA and within our fulfillment and community. So it's like, hey, you want to buy more real estate, you need to make more money, come join our brokerage and we'll teach you how to do exactly that.
So as a realtor, this is like super elementary question, but realtors, are they technically like 1099 under a brokerage, or how is that structured?
Do you want me to go through like the tax setup?
Yeah, I was kind of interested because people listen to this, or salespeople, some are W-2, some are 1099, but like, I'm curious what the difference is for like realtors.
So basically like the primary driver for a realtor, like the unbelievable, and no one really understands this, isn't talked about. It shows that, the tax law and everything is certainly written by certain people, but you get paid through the brokerage. And it's commission only, right? So you're obviously not W-2, you're paid like a contractor. And the crazy thing is that as long as you materially participate, which means that you're running your business, and two, you put a minimum of, I believe, 750 hours into your business, you qualify as a real estate professional. That's a massive advantage because what you can go do, and this is a huge opportunity for anyone out there that is a real estate professional, what you can do is you can actually go buy real estate. So let's say you go buy $500,000 property. Let's say you made $300K GCI, so you took home 300 grand. What you can do is you can take that $500,000 property. You can actually do something called cost segregation, which will front load the depreciation on that property. So on a $500,000 property, you'll probably get, say, $250,000 in accelerated depreciation. And because you're a real estate professional by the IRS, you can take that $250 as a loss on your $300 net income. So the IRS will actually see your gross income, your net income that year, as $50,000. So you're only paying taxes on that 50. So you can shield yourself just in that scenario of 60, 70 grand a year, which then you use that 50, 60, 70 grand and you put it back into buying more real estate. And then if you do that year over year, that'll compound on itself. And it's like money that didn't even exist.
That sounds like very similar to like the 1099 strategy that I'm pretty familiar with, but like, where's the break between being a real estate professional and being like a high paid 1099 solar salesperson? Like, what does the real estate professional get to do that the other 1099 guy can't do in that instance?
It really comes down to if you actually, and disclaimer, I'm not a CPA. I understand the fundamentals of this. I can't go too much into the specifics. I also don't know actually how you are classified as a solar salesman, but you're definitely not a real estate professional. A real estate professional is someone that is actively working on or in a real estate business every single day. We're talking realtors, property managers, lenders, title, etc. You have to be in one of those fields to classify. And if you can classify, you can then take your accelerated depreciation off your property and you can put it against your active income. If you don't, tell me if I'm wrong, Dylan, but as a 1099 sales rep, if you go out and buy a piece of property, you are not able to actually go out, accelerate the depreciation and deduct that from your active income.
I don't really know. Again, neither of us are tax professionals. We're on the sales podcast right now. You guys, we're just spitballing here. Or maybe I'm spitballing more than Ward. But dude, I thought 1099 sales reps could, in some instances, use like the accelerated depreciation. Like I've done it personally, not in real estate, but as like a business owner, which is different, obviously. But I do know like all these guys that are in Utah, they love door-to-door sales in Utah. All of them hit the same pipeline of like pest, solar, home security to rentals, right? And it's because they're 1099. W-2 employees can't take advantage of like the same benefits around that, from what I understand.
It depends what field you're working into. And usually, like as someone working in real estate, 90% of the time you're going to be commission based. So you really can't. The only time that I think about that is a property manager, but that's really the only time that I think it would apply where you could be W-2. And even then, I think I'm wrong, because I was talking to my CPA. I actually think you need an equity stake of, I think, more than 5% of the business to actually take that deduction to qualify.
All right. So kind of playing on this theme of like investing into real estate as a sales professional. If someone's watching this, I guess it would potentially differ based on if they're a W-2 or a 1099. But let's say there's some people watching this and some are like, this is cool. I know real estate is for me, but I'm not really sure like what is the best strategy. I guess in the current landscape of the market, I'm curious what your take would be on like, one, the best strategy to build long-term wealth, and best could be subjective, right? So long-term wealth, and then two, the best strategy for cash flow purposes, assuming you're talking to a decently paid sales professional that has more money than time.
Has this person purchased real estate before?
Mm-mm.
Never. So what I would say, to answer your question, number one, like the best way to go about it with your first deal to make sure it's a good deal and to get a proof of concept, absolutely do something owner occupied. We call it house hacking. This is how I got started. Essentially what you do is you buy a duplex, triplex, quadplex, VA loan if you're a veteran, FHA if it's your first time home buyers, you can get in as low as 3.5% down. So quite literally, if you're trying to buy a $500,000 home, you can get in for less than $18,000 down plus closing costs. And you're looking for duplex, triplex, or quadplex. If you're in an area where you can do that, you can literally cut your living expense by zero. If so let's say it's $1,500 a month, let's say $1,000 a month for easy numbers. You can save that $12,000 a month. You can reinvest that into more deals moving forward. You'll get enough management experience and acquisition experience without great exposure. And the fact that you can do that, personally, I believe that those opportunities are the absolute biggest wealth building opportunities of anyone in their 20s. And I think everybody should be doing it without a doubt.
So same answer for both like someone who's young, making good money in terms of building wealth and cash flow at the same time. It's the idea of house hacking is your best recommendation.
Yeah. I mean, if you're looking to get into it right now, there's other options. Let's say you're paid well. I would do that regardless because that's an easy layup, right? One of the biggest KPIs we look at is going to be cash on cash return. You're going to get the highest cash on cash return there because your money in is so low and your exposure is so low, meaning you can make mistakes. That can get dangerous if you're not getting a performing deal. The most important thing there is that you really, you have the income to support the debt, and your base case, worst case, and best case, you're still cash flowing a little bit if you were to fill that third or fourth unit that you'd be living in.
When you say income to support the debt, is there like some sort of number multiplier that you try to aim for to where you meet that threshold, or just blanket statement like make more than what the debt payment is?
Yeah, absolutely. So the metric that you're talking about is called a DSCR, your debt service coverage ratio. And what I shoot for is a minimum 1.5 to 2, right? So if I have a property that's got a PITI, a mortgage payment essentially of say $3,000, I would like to see that property making a minimum of 5. And if it's not making a minimum of 5 by the time I buy it, my whole goal is to get the revenue up on that property to a minimum of 1.5 DSCR, debt service coverage ratio, so I can then cash flow on it and be protected as the investor. There's nothing more scary than realizing you are completely hosed because rents have gone down and you can't fill a vacant unit and you've got a $3,000 a month nut that you got to come up and you're not even living there. That is what you want to avoid. And that's why that DSCR KPI is so important.
Yeah, this is a good segue into basically if you are a high paid sales professional and you want to get in real estate, but you don't know how, or you just want help minimize downside. I mean, time is money when you make a good amount of money. So just save your time, save yourself the headache, work with someone like Ward and find investors,
And the biggest thing, right? It's funny because, real estate, I can say just from doing it, I leveraged the hell out of myself very early on and I didn't really realize the risks. So I was very bullish. I would say so bullish that I look back, I'm like, I cannot believe I did that. I could not believe I took that risk. But the thing that let me take that risk safely was actually showing up to these calls and being like, I just found these 3 deals, like, let's analyze them. And then someone really teaching me the process. You're going to end up very happy if you close on that and understanding why. The main difference as to why I'm at where I'm at today versus, I could have just gotten hosed if I was doing the wrong processes.
What was the biggest mistake that you did make that would be good for people to watch out for as you were kind of playing aggressive coming up?
Yeah, I bought a single family home I should say it was actually a partner of mine buy a single family home. It was in a market that's been depreciating pretty aggressively ever since COVID ended. But at the time it was cash flowing, right? So we had that 1.5 DSCR KPI. It was perfect. Cash flow $700-800 a month. It was a $325 purchase price, $325,000. It was a 4-bedroom with an extra bathroom. So it was like, we can rent this by the room. It was right next to Samsung. It looked like a slam dunk. It's like, this is super easy, super scalable. We're going to nail this out of the water. What we didn't realize, we weren't looking at enough macroeconomic trends. So we didn't see that there was a huge oversupply. We missed some pretty rudimentary things, and we were just too bullish. And today, that same property, it loses $600 to $700 a month. And the management is a huge headache. And the reason why is because essentially in that market that we bought the property, rents have come down by over 40% because there was an overbuilding of apartments, like right in the same area, because they all obviously had the same idea we had, right next to a big tech hub. So what happened was as all these apartments weren't rented. So they would take their studio apartments and they'd say, you can get in for $600. And that's what we were charging for our room. So we couldn't compete anymore. So we had to keep dropping our price and just keep dropping our price and keep dropping our price, which means we get lower and lower tenant quality, which means we make less and less money, which means we have more management overhead and less money coming in, which means now we're paying out of pocket. On top of that, the value of the property depreciated because we kind of bought at the top of a bubble. Again, we weren't looking at the macroeconomic trends. It was not a good time to buy, but we were just super bullish on it. And now we can't really sell the property because our note on the property is higher than the actual value. So if we sell it, we'll actually have to come out of pocket at the closing table to close out our loan and to prevent going from a foreclosure.
Even though that's a terrible, awful situation that nobody wants to be in, like, that's the game, like you probably learn so much by going through that process. It's like, okay, well, now I know non-negotiables. Next time we do something like this, like I need to look at this, this, and this, or like whatever. And then, hopefully you hit a win that's bigger. And I know you have other properties and stuff like that. So
I can say too, not to cut you off, Dylan, but like, that was one of the ones that I had bought later and, very grateful for that opportunity. Cause one, it was a costly lesson. It's semi-costly lesson, $700 split across 2 people is really negligible. And as long as we hold it long enough, we're completely fine. But it's just a headache. I can tell you like tax savings off of just depreciating a piece of real estate can save you 40, 50K a year. Nonetheless, off the portfolio, multiple hundreds of thousands of dollars in appreciation over the last 4 or 5 years, in addition to 5, 6K a month cash flow. So it's nothing. It's extremely minor, but it's frustrating because I would love to exit it, but it just doesn't make sense.
Yeah, at least it's like kind of negligible amount. Like it would be a lot cooler to make $350 more a month instead of spending it split between 2.
And what's interesting, Dylan, like we could do that if we actually like really tried. But then it's a question of, well, the time that's involved to go make those revisions and to go actually fix the property, which would really be adding a bedroom. It's going to cost another 5 to 6K to do that. Then the management's going to be more intensive, but I'll make $350 a month. Now, I'd rather lose the 700 and go grind on the business and make, another 20 grand at the same time.
That's the cool thing about being in business, like running businesses and doing real estate instead of like real estate being the entire business. I guess at a certain point, you can do that with a little bit less worry. Like once you get to a certain size or you're striking up like certain deals, but it's like your time. I know we talked about kind of community that you're running, other stuff that you're doing. Like it's less of a headache to pay that out of pocket because you have other stuff going on, which is kind of the same idea with like salespeople. If you have a sales job, it can definitely help you like stomach some of these losses a little bit better.
Absolutely. It creates a new floor for you as long as you do it right. Last thing I'll say too is like one of the big opportunities that I saw, and actually I took an internship. I was still in college going into my junior year. And one of the big reasons why I decided to like go all in on real estate was because I basically saw it. I was like, look, if I can go buy an asset that will appreciate, that maybe in 4 years after I buy it, we'll have 150K of equity and cash flow me, say 2K a month. That's a superpower. Because now I can be, say I buy that at 22, and this is what I've done at 25, 26, 27, 28. I can now sell that property, walk into 150 grand and go use that to go jumpstart my next opportunity. And that lets you swing, that lets you take a massive swing that otherwise you wouldn't be able to.
Yeah. And if we look at good deals and bad deals over the course of 10 years, 15 years, 20 years, you're going to be in the green as long as you don't give up. Obviously nobody can guarantee anything to anybody, but like if you just show up in the right spots, make calculated bets, you should be able to figure it out, right?
And that's the last thing I'll say in real estate. Like, yeah, like that property that I talked about, it's a loss. It sucks. It is what it is, whatever. But if we hold it for probably realistically, I'd say 3 years best case, 6 years worst case, we're going to make a ton of money on that property at some point. So what is that? $700 loss times 12, call it, $8,400 times 3. We're talking 30 grand plus maybe 20K in CapEx. We're talking 50 grand. And I won't exit that until I make a minimum of 75 to 100 on the other end. The question is how long does it take?
Yeah, that makes sense. I know we're kind of pushing up on time here. The last thing I wanted to ask you, this isn't going to apply to everybody, but some people, Austin market, man, like we talked about it a little bit. It's crazy. A lot of people coming and going. What's your read on the market now, like the trends, and what are you personally doing, if anything, here, like locally in Austin when it comes to real estate?
Yeah, so basically what I'm doing right now, what I see in the Austin market, for anyone that doesn't know, so the Austin market's come down since COVID probably about 15 to 20% across most metros, right? If we really look at the primary piece of Austin. And the biggest thing with that is not only have property values come down, but I don't know the exact percentage. I'm going to say it's at least a 30% reduction in market rents. As an investor, it's way scarier to have super high leverage when rents are going down, because that's your insurance policy to actually pay off that debt. It's also an opportunity. There's a lot of people right now that bought at that bubble with a lot more leverage than we do that don't know what they're doing, that are now 5, 6, 7K a month over their head that they can't pay. That is massive opportunity. And what's cool is those people need an out, and they're really struggling financially. And if you're a savvy investor that can come in and create a win-win opportunity, you can go and get some really solid deals. It's really about finding those deals, building that win-win situation, and crushing it. I think, the second answer to that question is this could be a really good time to buy in Austin. It also could be a really bad time to buy in Austin. My personal hypothesis, I personally think that probably the average home value, again, in Austin is probably going to come down another 10 to 15% over the next, I'm going to say 18 to 24 months is my assumption. It may happen a little bit sooner than that. And it's going to really depend what the Fed does. If Jerome Powell goes ahead and lowers rates, we're going to see prices soar back up. If he keeps rates where they are, prices are going to keep coming down. If I'm going to hedge my bets, I would find the best deals possible. I would find the most distressed sellers. I'd negotiate the best deals. Personally, right now, I would lever up.
There we go. Well, I think that's a good spot to end it there. A lot of good crossover between selling, being a salesperson that might be interested in real estate. We talked about it a good amount, but FI investors, if you guys are listening and you're interested in getting into some real estate and potentially seeing some tax benefits, some wealth building, some cash flow, all of the above, we'll put the link down below. And then Ward, where can people find you? Like what platform do you like?
First things first, we're always looking for good closers. So if you have a closer with a good track record, know a little bit about real estate, or even if you don't, hit me up. My best Instagram is, my handle is W Mahoney, WMAHONEY 24 is my Instagram. I'm going to be starting a YouTube channel here soon. So that may or may not be linked up. But yeah, Instagram would be the best place to hit me up.
All right, man. Well, I appreciate you coming on, and we'll wrap it up there.
Hell yeah, Dylan. Appreciate it, brother. Keep crushing.
All right, guys. That's the episode with Ward. Hope you took some good nuggets away from that, whether it's scaling an online offer, scaling an agency, scaling a lead generation business, building your sales team, getting into real estate, investing into real estate, whatever value you took away from this, I'm glad you took something. I'm going to put all of Ward's links down below. Whatever he provided to us is going to be down there. So go connect with them, go ask him some questions. And if you're in the Austin area or maybe even Texas and you need a realtor, I'm sure he can help you out. If you're looking to invest into real estate, I'm in a mastermind group with a lot of mutual connections with Ward and his business partner, and they have a really, really good reputation. So I'd really recommend using them for learning, for real estate services, and all of the above. Before we end this episode, you guys, my final ask, you already know. Get down to the description, subscribe to our free newsletter. It's free, always has been, always will be. We want to give you a pulse on the state of selling, not some boring sales training email that teaches you something you already know that you read like once or twice and dip out of. We want to be your pulse on the state of selling. So whatever's happening in the world of being a sales professional, we're going to send it to you every Wednesday. It's less than a 5-minute read with your morning coffee, and just stay up to date, man. You never know what kind of opportunities are happening in industries that you are not in, but you have a valuable skill set. It can be used in many different industries to sell many different things. And we want to give you the perspective as to what is happening in the world of sales. So go down, free newsletter, subscribe, first link in the description, and we'll see you next week.